Good morning, traders. It is Saturday morning, the 4th of March, and I wanted to provide our weekend update here. So, this will be the first weekend update that I'll be doing and posting onto my new website, sjgtrades.com. And I know we have the two different groups there. We have the small ball traders, which are newer options traders, where we keep the risk scalable to a maximum risk of $250 anytime we can. And then we have the index options alert service, which is geared toward traders trading larger size. And of course, those can be scaled up. Many of those trades are going to have about $2,500 in risk, but they can be scaled up to pretty much any size you want. So the first part of this is actually doing a little bit of market analysis, and then we're going to get into the various trades that are open in each of those services. And I'm actually only at this point going to do one video. I'm going to share it to both groups because at the start here, I think it's going to be important for the two different groups to kind of see what each other is trading and how they're trading it, to make sure that you can look at that and make sure that you're in the group that suits your goals and objectives best. So, of course, the first thing that we look at is our overall market, which is the S&P 500, and this has been in a significant downtrend for months and months and months, and it's been, literally making lower highs and lower lows month after month after month. Now, here recently, we made a higher low right here, but you don't know really if it's a higher low yet at the time that that happens, because it could still then drop off. So this is not confirmed as a higher low until we make a higher high, which is what we did here. So we made a higher low and a higher high. That is the signal of a trend change. So, of course, there's no guarantees that this trend is now going to continue on, but at least at this point, the trend has in fact changed as a result of these two particular areas. So you'll notice that earlier in the week, when we put on new positions in both services, actually, I indicated when the market was down around here, I indicated that it's very typical for the market to come down to the top of the prior trend line and then bounce off that pretty aggressively. Now, that's before these last couple days happened. That was my expectation. That did, in fact, play out. We've bounced off those. If this holds, and if we, in fact, make a higher high here yet again, I drew this green trend line in here. This will now become our uptrend line. That it's in place right now. I mean, it is a valid uptrend line right now. But once we make a second higher high, this will become a little more accepted out there among the trading and investing world. So already it's getting traction. People are believing in it because of the higher low, the higher high. But again, if once we make a third one, that kind of seals the deal for many people. And they're like, oh, we do have a trend change. So anyhow, that's kind of where we're at from a market perspective. Right now, I am anticipating the market continuing to move up. I don't honestly know if I'm going to expect it to make a higher high right here just yet. We do have some Fed news coming out early next week and some other economic indicator numbers that are certainly going to have an impact on this. If the market does pull back, I right now would expect a pullback to this green line and then probably some stabilizing around there, and then maybe a move up after that. We could also, I would expect, if we continued higher, we're going to get up here around this 4,100 range, probably have a little bit of resistance in that 41, 4150 range, at least a little bit of chopping sideways. And then again, at that point, it could potentially break to the upside, or it could come back down to this line. But that's kind of my expectations right now is, moving between this 39, 39.50, 39.60 up to about 41.50. So that's kind of our, in my opinion, right now, barring any extraneous news, that's kind of the playground that I'm expecting that we're going to be in. So let's take a look first at our small ball trades. So if we look at the small ball trades that I've made since launching this service, going back, well, I don't know, I think it I think the earliest trades we had here was in February. So these are our results so far. Now, these 4 trades are still open. We haven't closed them, so they're just showing a 0 gain right now because they're not closed yet. These are all of our closed trades here. And if we look at a bar chart of these, this will show us the P&L of each of those respective trades. And then we can look at an equity curve of those trades as well. So this is the equity curve of those trades. Now, I do want people to keep in mind that some of these trades were made while they could have been scaled back to $250 in max risk. Some of them were made with a larger risk. When I'm trading, particularly my earnings trades, I go in with about $1,000 in max risk on an earnings trade, but I make sure that they are in fact scalable back to $250 or less. So I do want to be clear that particularly the earnings trades here did in fact have some larger risk associated with them. So these numbers are going to be a little bit inflated from what a true small ball player might expect to receive on this. So, and again, this is the list of those trades. So just to clarify, like the Zoom earnings trade, the PayPal earnings trade, these are going to be some outsized gainers as a result of the fact that where a small ball player might have traded one of these, I traded 5 of them. So again, just want to be fully transparent on this. So very nice small ball trades, been working well. Our current positions that are open in small ball, let me just take a quick look at those. And this does take a minute to load, especially on the weekends. But these are our current 4 positions we have open. We have this skewed iron condor in XLF. We have an order out there to take this off. If we hover over this little icon right there, we've got an order to take that off at 15 cents. Right now, this is trading at about 20 cents, something like this. So I would expect that Monday or Tuesday, this trade's going to pop off. Now, again, we're looking at, a 30, probably at the time it comes off, maybe a $35 profit, $38 profit, something like that. Which I know is not a big number, but look at this. I mean, that's a 16, 17, 18% return in a matter of a week and a half, something along those lines. Our maximum risk in this trade was $208. So if we get $40 out of that, that's a 20% return on our money. That's what you need to look at as you're learning this skill. You're risking a smaller amount. Your gains are going to be smaller, but you're learning that skill. That's the important piece of this puzzle right now. And then same thing here, we will put an order out there. We don't have one out there yet, but we'll put an order out there this week to potentially close this trade out. Right now, this trade's up about 15%. We did close out a similar trade to this one in SPY. We closed that out on Friday, and we closed that out for, I want to say it was around a 25% profit, somewhere in that general range. We just put this trade on in DIA early last week, and we may need to adjust this one if our market continues up. We do have an upside risk on this trade of $30. If the market were to continue up and we did not adjust this, we could lose $30 on the upside. So if the market does continue up, there's a couple things we can do to adjust this, where we will raise the right wing here up a little bit, and we may be able to get it to a profitable state. We may only be able to lift that up a little bit to reduce the loss on the upside. Again, we'll have to take a look and see what our market does come Monday on that one and how we will address that. And then we just put on this new trade in TLT on Friday. This is an iron condor. It has a total of about $185 in maximum risk. Again, we'll have to watch this one. When we put this on early Friday, our price, this yellow bar, was in the center here, and we were looking to have some decay occur right in the center. But of course, we're now pushing the upper edge of this, and we're pushing against what we call the call spread, the call vertical on the upper side of this iron condor. So we may have to deal with that. We may have to adjust that this next week as well. This trade expires on March 10th, so it's going to expire quickly. So this is going to decay quickly. but it's also going to be a problem quickly if the market does continue to rip up on this. So we'll have to kind of see what the market does on Monday and make a plan on this one. And then we'll look to open maybe another one or two next week as well. We are largely out of earnings season, so there isn't really other earnings trades to be had for the next probably 6 to 8 weeks, somewhere in that range. There may be one or two in there that have enough liquidity, but for the most part, earnings season is over at this stage. So let's go take a look now, kind of walk through that same process for our index options trade alert. So let me come back to our reports. Now, again, keep in mind here that we're trading a little bit larger. So this is just all trades. This is, my personal trades, class trades, etc. In a couple accounts. I trade in multiple accounts. But let's look at our class trades closed since December 1st. And these are our closed class trades. So we have had a nice run. We did have a loser pop in here last week, which is not abnormal. This was a long run of trades without a single loser. And we may have another one showing up on Monday. But just to take a look at this, so that's our list. This is our bar chart that shows our respective trades and the P&L in each of those trades. And then this is the equity curve, the result of those trades after they've been closed. So the Index Option Alert Service is having a good run as well. Again, these trades are a little bit larger in size, so they're going to have a little more P&L, good and bad, associated with them. And you're going to need, if you're going to trade in this group, you're probably going to need an account size of $15,000 to $20,000 at a minimum. And then, of course, you can scale trades up from there. I mean, I know people trading much, much larger, six-figure, maybe even seven-figure accounts with some of these trades. They're just scaling them up. But anyhow, obviously, that comes with the corresponding risk. So let's take a look at our current open trades that we have in the Index Alert Service as well. I need to come change my view here from small ball trades to our, to our open. Let's see. Class trades closed. I know I set all this up. Oh, live class trades. There we go. I need to get my naming conventions maybe a little cleaner there. So these are the three class trades that we currently have open. I will say that these T0 lines do not report correctly after hours. You'll see that this thing is dipping down, into here somewhere, showing that theoretically there's a $286 loss. There's not. It's just that when the market makers close up their desks at the end of the day, Friday, the orders get pulled. So on the weekends or after hours with options, it doesn't have access to the correct and current pricing. So that line gets a little bit wonky. But we can see up here that we have about $140 in profit in this particular trade. So this T0 line actually is kind of mounted up in here right now. And we're looking for that to decay a little bit further in that location. If we need to, if the markets continue higher, we're going to need to make an adjustment in this trade and in order to probably raise the right wing of this, or there's a couple other things we can do here that we'll consider. But so we will, if the market continues up, we will likely need to make some form of adjustment on this early in the week. This one is one we just put on this week. It is a flat butterfly with a long call, which is what gives us this configuration here. And this one is up about 12% right now. And it's largely because of the value of this long call. Again, this dip is not an accurate depiction since our markets are closed right now. This is an accurate depiction of where the pricing was at the close of the market. So we have these two open. Then we have this one, which is a problem. This one is likely to come in as another loss. So this was a calendar that went hard against us. we added a lower calendar, and then we got whipsawed and it went higher again. So, and unfortunately, one of the challenges with calendars, um, if we don't close these out early, if we carry these too close to expiration, which is what happened in this one didn't act right from the start, I will say. But when they get close to expiration, they're much more difficult to manage, and you have a lot of potential risk in them. So what I did on Friday was I took this calendar configuration, I rolled out the short expiration that was going to expire on Friday. In fact, I can, let's see, I can go to the, here we go. I can show you what this looked like on Friday. So let's see, we'll go, yeah, let's go back to March 2nd. So on March 2nd, this trade looked like this. We need to focus on this area down here. Forget this. This is just a long call portion of this trade that really didn't come into play. So we're looking at this. We want the market to decay right in here. I did take off one of these at that time. We had two of them on. I took off one of the calendars. In retrospect, of course, I should have taken both of them off because we had a total loss at that point of 354. I was trying to work it into a profit. My expectation was that the market was going to go higher on Friday. Again, this was on Thursday. My expectation was that the market was going to come up here and be a little higher on Friday and decay well right within that 10. Again, that was my thinking. So this was the plan before adjusting. After I took that trade out, this is where we were at. We're down 335. I have literally one left, one calendar, and I had an order out there to close that one calendar. Again, we can forget about these two long calls at 41.20. Those are meaningless unless our market really blasted off, which I certainly was not expecting. So the hope was that these would pop off on Friday with some sort of a greatly reduced loss or a higher, a little bit of profit. But our market just ripped right up. It just totally blew right through where I thought it might slow down and stall. And quite frankly, I was working on other things. I was working on the upcoming butterfly class, etc. Wasn't even paying attention to this. And it just blew right through that zone and never got to a point, and never decayed in there to where my order was triggered. So then I ended up with a much larger downside on this. The only play I could make at that point, if I didn't want to just close this out and accept that loss, was to take my short strike that expired on Friday and to roll it out to Monday and roll it into essentially a vertical where both strikes expired on that same day. At that time, I also sold these two long calls as well. And then we ended up in this configuration. So if the market stays above 40.30 on Monday and this thing decays in place, I will reduce my loss to $462. But that's kind of the best I can do with this trade being the way it is right now. If the market pulls back and goes below 40.10, I'm going to take a larger loss on this. So this is why I hate trading these this close to expiration. In retrospect, I should have pulled the plug on this back probably 7-8 days ago when it wasn't acting right to begin with. The short strikes were not decaying the way that they normally do and should. And sometimes that happens, and I can't give you an explanation for that. But when I see that happening, I should know to take action, and I did not. So anyhow, that's where I'm at on this and what I'm faced with now. In the ideal world, what I would like to see happen here is maybe we get a gap up on Monday. Maybe we gap up here to 40.50, 40.60, 40.70, somewhere in there. If we get that gap up, I may very well sell a call spread against this, turning this into a one-day iron condor and letting it decay. If I can do that and I can pick up some additional premium for doing that, I could further reduce this loss, maybe even work it into a small profit. But I'm kind of day trading at that point, which I hate doing. I'm basically relying on the market to stay in a certain range, literally during the course of that day, and letting this decay during the day. A lot of people trade that way. I used to day trade. It's just not my thing. I would rather do something where I don't have to pay attention to my positions during the day. Look in on them once a day, twice a day, whatever. But that's kind of where I'm at on this one. I got myself in this own position, and so that's how we're managing it. So, short of this, again, this could crop up as another loser here come the close of the market on Monday. And that will be our second loss since September 1st. So that's where we are at in the index options alert service. So again, this is all new to me as well. So if you people watching this and in the groups have any thoughts, suggestions, ideas, please, please, please feel free to share them with me. Steve at sjgtrades.com. Love to hear from you. And things are kind of, up in the air and flexible right now as I'm trying to formulate all this. The one final notice I'll put out there, and I think most of you are in fact signed up for it, but I am going to be teaching the all new butterfly class. I believe I'll be starting that on Sunday, March 19th. That's yet to be totally firmed up, but that will probably be the first session. It will run at least 5 sessions. Each one of those sessions, at least, they're going to average about an hour each. The first 2 may be pushing 90 minutes. And then maybe the last 2 will be a little bit shorter. But all of you will be able to be in there live. All of you that have purchased that will be able to be in there live for those recordings, be able to ask questions. I'll have multiple question periods. And then those recordings will be the new class that people that come in after you can purchase if they like. So keep that in mind. Again, I will be having notice come out to you on that as soon as I get those final dates locked down. But the game plan right now is to start on Sunday the 19th, and then we'll run for roughly 5 weeks. And then at the end of that, you will have the latest and greatest in understanding butterflies at the deepest level. Once we've accomplished all that, my goal is to go start working on a calendar and diagonal class. That's going to be the next one I want to tackle. I've been making a lot of notes on that. And that's my favorite trade around earnings too, by the way. So we're going to look at earnings trades using that technique. But we're a couple months away on that one at this point. So again, thank you all so much. I appreciate you checking in. And this is our weekend update on March 4th, 2023.